This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm your host, Kerry Lutz. It's 5/30/23, show number 497. So we're in the midst of AI mania. Nick,
yes, we are.
Do you think it's going to get like internet was like in the late 90s? We're just going to have any AI stock, you buy it. If it says AI in its name and they're butchers, the stock will just go up?
You know, it's looking that way, but I have to say, Kerry, this move has been parabolic, and I think it's getting overdone already. When you go parabolic, you don't have staying power. You need to be on a more subtle trajectory to continue to go higher. This has just gone to the moon, and a stock like, say, NVDA, which is a leader of the pack, I suppose, because they make the most advanced AI chips, and they're going to sell to everybody, and supposedly they're so far ahead of the game. But this chart is euphoric. It looks almost like the Bitcoin chart when it topped out. So, everybody's obsessed with NVIDIA right now becoming a $1 trillion company. I believe today it hit that 1 trillion marker for a few minutes, and now it's sold off a bit. But this stock is way overdone. If you own this stock up here, honestly, I would be selling or trimming or putting in a trailing stop loss if you happen to own it lower and you have great profits in there. But I would never, ever buy the stock up here at this price. In fact, earlier today at the open, I put a post on my Twitter feed saying, I have a resistance level around 415. It hit that number, pierced it by a point or two, and now it's back down to 409. So I think this NVIDIA run is coming to an end very, very shortly here.
Yeah, well, but we know how Wall Street loves a fad.
They do. You're right, 100% right about that. And, I think they've been running with this fad. I just think that NVIDIA put the cherry on top of the sundae.
All right. Well, so consumer confidence went up?
Yeah, consumer confidence for May is 102.3 versus 99.5 expectations. Just another strong number, but everybody's looking at this like this is so great, but this puts the Fed in the corner. How are they how are they not gonna raise rates in June? Economic data is coming out strong. AI is roaring and soaring. You have everything, AI related going higher. This coming Friday, we get the unemployment report. So if that comes in pretty strong, the Fed's got to raise rates. And we've seen, not today. Today we're seeing yields pull back, but prior to today, we've seen, the 10-year go above 380. Now it's at 372. And we've seen the 2-year Treasury note yield move back above 450. Today that's backed off a little bit as well, but all in all, it's still above 450. The Fed is in a pickle, and they're going to need to raise rates. And, everybody's just thinking this is the next big bull. But I think this is the next bull trap. So I would be very, very careful at this stage of the game with everything in the market, and more notable, this AI move, which I think has gotten way out of hand.
All right. Well, yeah, that's weird. Why would consumer confidence be going up? Everything is so down, and economy looks like it's deteriorating before our very eyes, right?
I agree. Everything is looking terrible with the exception of AI and these high-flying technology names.
All right. Well, I guess we'll see what happens.
We've never seen leadership this thin. I can't remember, out of all the years doing this, basically you've got 10, 15 stocks that are pushing the entire market up, and more in particular, it's NASDAQ and NASDAQ 100. But this is not leadership in other areas. We're not seeing a broad-based advance. You're not seeing any kind of, hey, maybe we're all going to the metaverse and AI is just going to run it all.
Well, there's a nice thought. I could deal with that, I guess, maybe. Hey, so we got a tentative debt ceiling deal, and it's just all theater, right? I mean, they're supposedly going to put off hiring all those IRS agents for a year. Well, they'll never get hired, but they'll be hiring AI computers for the IRS. You know that.
They don't even need people anymore. This is where we're going. This is what society is about. This is a tentative debt ceiling deal in place. I know there are some Republicans out there that will not vote for this, so this got to still be this still got to get passed. I'm not sure, if it's going to get passed. I'm sure we're going to get a lot more drama out of this before it's all said and done. But again, I believe I was reading somewhere this morning that spending will actually go up this year.
Of course. It's a big scam.
Why even have this debt ceiling? We've already crossed the Rubicon. Just run up the checkbook till it bounces.
Till the paper that the checks are printed on is worth more than the money that it's going for, right?
That's it. We've really have already crossed the Rubicon. The debt is at approaching 32 trillion. We've just seen things in this government that I've never thought we would see. Not because I don't put it past them. I just didn't think it could get this out of hand with the spending. Talking about 6 years, we've spent $14 trillion or borrowed $14 trillion. Federal Reserve right now still has an unbelievably bloated balance sheet, if we could even trust those numbers. And then, you get a banking crisis where you get 3 banks fail and the stock market goes higher because the central banks essentially do a QE program or multiple QE programs without calling it QE. You just got to shake your head at this stuff.
Right. Hey, so energy's getting hit again?
Yeah, energy is weak today. In particular, it's really oil. Oil is down nearly 4% today, back below that psychological $70 level. You know what I've said on this program, Kerry. I gave you the scoop first. I think oil ultimately can get down to $50. But when it gets down there, and that's still 20 points away or 19 points away at this stage. But when you get oil at 50, just buy it with both hands and don't even think about it.
Yeah, I agree. And hey, somebody, one of our community members asked a question, nat gas, what's your latest take on it? It seems to be like 260 seems to be a ceiling right now. What do you think?
So if you take a look at nat gas, during Options X, I believe nat gas got up to around 268, if I'm not mistaken. And now we've backed off again, and we're sitting currently around 231. This looks like a monthly chart bottoming pattern to me. So if you got the staying power, I would sit with nat gas right now. These monthly chart patterns take a while because they're bigger time frame scale. But I really think the low is in for nat gas, and we're going to see nat gas make some moves from here. It's just not going to be an instant gratification type play. But I love everything nat gas is doing. It is not making new lows. It's made higher lows. You did a big monthly chart double bottom. It's got all the characteristics to go higher. And don't forget, it wasn't that long ago when nat gas was over $10. And now at $2, everybody hates it. So, that's why I love it anyway.
I love nat gas, period, but that's just me. Call me crazy. Hey, so finally, Bitcoin was getting a bid this morning. Now it's down a tiny bit. Nothing to see here for now, right?
I don't think so. Bitcoin's came out of the gate like a thoroughbred racehorse. Now it's basically flat to negative. So again, we'll see where it closes. But I don't think there's a lot to really see here for Bitcoin right now. It has rolled over quite a bit from that strong open, though. So we'll be keeping tabs on it. Again, if it does make a move, it will be just a nominal high from where it was basically in April and March. And then I do believe Bitcoin's headed a lot lower.
All right. Well, that's it for today. Make sure you go over to Nick's site, inthemoneystocks.com. See how he's beaten the averages for decades. Twitter feeds at ITMS, at Nick Santiago 01, at Kerry Lutz. Email kl@kerrylutz.com. And put your comments down below on the YouTube channel. And Nick, we will catch up with you tomorrow.
Oh, yes. Let's do it again. I'm looking forward to it.